This is Real Estate 360. I'm your host, Steve Vazza with the Vazza Real Estate Group. I have the pleasure of having Elaine Philbrick from Derivative Advisors with me today. Welcome.
Thank you very much, and I'm so pleased to be here.
Exciting time to be in your business.
Yes, finally.
Finally.
Yes, so we are very excited to say that this is a good time to hedge, and we feel confident in saying that. The last few years, it hasn't been the case. You know, we've just seen rates come down so low and stay so low. So then we did have a lot of borrowers who said, why did I lock in that rate? Why am I not floating? Of course, you don't always have the choice. And
That's
the banks will often, for their debt service coverage protection, they're going to require the borrowers to fix the rate. So, you know, that's the main reason people have been fixing. But now I think they're fixing because they really are concerned about where rates are going.
About where rates are going. And, you know, where do you see the rates going over the next, several quarters?
So actually, over the next few quarters, we definitely would say that we're expecting something like 30 basis point increase on a 10-year rate. So we do expect significant movement. When I look at the hedging markets and where they're pricing it, they're only putting in about 12 basis points to do that, to lock that far forward. So that makes it a good opportunity, we think.
Yeah, well, you know, obviously you and I, we've done business, and you know, I like the whole process and the swaps. A lot of people see them in the term sheets, and quite candidly, they don't even really know what it is. And you know, we see that often. You know, explain, if you would, please, you know, the benefits to somebody that may not really know exactly how the swaps work.
Yes, and I can tell you, I've been around since the late 80s, so, and I've seen where it used to be all conventional fixed rate loans, and now those are almost obsolete. Almost all your large banks, as you mentioned, the swap is going to be in the term sheet, and so it's really converted. Even a lot of the smaller banks are offering swaps, and the reason that they're doing it, and the reason it's popular and better than the conventional fixed rate loan, is because it has better prepayment terms, you have more control over when you lock the rate, you have more control over the kind of structure if you wanted to have some prepayable options, et cetera. And so for most borrowers, they actually prefer, and for the bank too, they're going to prefer the swap structure, especially the prepayment terms.
Absolutely. You know, I know in the past, I've done some swaps. I remember one particular deal I did out in Phoenix, Arizona. And if I remember correctly, I think that, you know, I was reading the documents myself, and I dealt one-on-one with the lender. And quite frankly, I was reading, you know, a foreign language I didn't understand really. And my experience with you has been that, you know, you're a tremendous advocate for the borrower, and you really talk the talk. And you know, what I've seen you do on the negotiating standpoint and just sort of, you know, parsing through the forest has been tremendous.
Thank you, and that's exactly why we exist. It's the reason we're here, is because the pricing is not transparent and the documents are this industry, they say it's a boilerplate, but as you've seen, it's not actually a boilerplate. So we do negotiate changes to those swap documents with the bank. It's about 26 pages and it's not in English. You know, it's legalese, so that's something that we definitely help borrowers with every day.
And you deal directly, you know, one-on-one with the swap desks at the lenders.
Exactly. They all know us very well.
I'm sure they do.
And, you know, they want every beep, and we squeeze them for every beep. But we understand our role in the transaction, which is we are not the driver. We completely understand you do care about your relationship with that lender. You need the money. You care about the credit terms. So we know that we're a smaller part of it. So we'll negotiate for you, but we're not going to create any problems for you. You'll close and on time, and everyone will still be friends.
Yeah, it's interesting, and you know, I'm very optimistic about, you know, the economy in general, but in particular the real estate industry. I think that, you know, we're in early innings of a great economy. You know, great real estate, especially here in Boston. There's a tremendous amount of capital in the market right now, and I see a lot of opportunity. You know. There's rational lending. I think lenders have been very prudent in their lending, and I see, you know, a lot of opportunity for borrowers to have credit available and to be working with a company like Derivative Advisors and yourself to help them, you know, really get the best bang for the buck.
You're exactly right, and we have people who just yesterday called us $6 million that they've got approved in a line, and they have no idea when they're going to find the property. Could be tomorrow, could be a year from now, 2 years from now, but they know that they're going to employ it, and they know that they're going to be borrowing money, and they want to make sure it's affordable financing when they finally do it. So yes, they call us to hedge it even before they have a property.
Is that right? That's interesting. Yeah, interesting. So where do you see things going in the swap industry over the next 18, 24 months?
So we think we're going to see a lot more people hedging and voluntarily hedging, not just when their bank twists their arm.
Yeah.
We also see a lot more deals in the money. And I know you've got one of them, at least.
Mm-hmm. I do. Right now, I'm
tracking it closely.
We are. I'm pleased to know that.
Yeah, absolutely. It's nice when banks write you checks.
It is.
It's a nice change. And so for us, our job now is to call all the customers who've been locking in rates with a swap, and to call them and let them know how much they're in the money, because these are unrealized gains that they can realize anytime they like. They just have to call the bank and say, go ahead and set my rate back to par, but I'm going to take all that cash out.
Well, we have an example in-house where we're actually considering selling a property, and when you start to factor in potentially, when it was brought to my attention just recently that we're in the money, as you say, and it can make a real difference on a principal deciding whether to sell or hold a property.
Exactly. You're not necessarily taking a haircut on the property price because you have some huge breakage costs on the financing. And it also allows some people to do some improvements on the building. It doesn't hurt their financials. If they were to borrow the money, that obviously impacts some ratios. So yes, it's a great tool, and it's something you have with swaps that you don't get with conventional fixed rate loans.
That's right. That's right. Well, that's very interesting. So let me ask you, if somebody wants to get in touch with you at Derivative Advisors, how do they go about that?
So absolutely, we're online. So our website is www.derivativeadvisors.com. It's probably the easiest way to find us. We're also on LinkedIn, Elaine Philbrick. But also we're proud to say, if you talk to commercial real estate developers and talk about swaps, a lot of them will name us.
They certainly do. I know I've talked to a number of fellow investors and developers as well as lenders, and your name, I've been dealing with your firm for years, but you are the go-to firm in the industry for swaps.
Thank you. I appreciate that. We've worked hard to make that happen. We've been here 12 years. We do over $1 billion a year in hedges for borrowers, and Boston's it's a small town at some point. So if you don't do a good job, people would know it right away. So we're proud that we've been in business this long.
Well, thank you very much, Elaine Philbrick from Derivative Advisors. I apologize. I have a little bit of difficulty with that. Thank you for coming on the show.
So appreciate it. Thank you.